Hi, this is Mike Poland with Braeburn Wealth Management with another episode of 5 Minutes to Improve Your Financial Life. And today we're going to talk about all of the news headlines that we get bombarded with that make us emotional and cause us to think we should do something. We receive calls from clients on a daily, if not weekly basis on a broad range of topics. And a lot of them are economic news. So for instance, unemployment or some corporate earnings at maybe a company that a client owns, or all the political news we're bombarded with, what the president's doing, what the Speaker of the House is doing, some stimulus activity, maybe the Federal Reserve is going to raise or lower interest rates, and clients heard that, they want to know what this means, how that, what should they do differently with their accounts. More recently, we've had, with the coronavirus, we've had the state governments and we've had the governors making proclamations and decisions, and then there's always those broad issues like the coronavirus itself, which we've had this year in 2020, or on an international level, maybe dealing with China and some of these trade wars or military issues, or maybe it's the Middle East where things are happening. And so people are bombarded with news and they call us and they want to know, what should I do? What does this mean? How should we position ourselves? And so the implication almost is that they're looking for the right combination of these items to change their portfolio to. And really, there's no way to do that. I know of no one that can do that. The best thing to do is to watch the market itself. We watch Mr. Market because the stock market itself digests all of this news, and the stock market looks forward. Always remember that. The stock market doesn't look backwards. It looks forward, and it's digesting what's going on right now and projecting where things are going to go. So we look at Mr. Market for all of that. And so how do you look at the market for those items and in turn manage your accounts? So if it's the stock market we're looking at, you might ask yourself, what exactly are you looking at? Well, the stock market we're looking at either the S&P 500 or the NASDAQ 100 or the NASDAQ Composite, one of these big indexes. And so how do we use those indexes to tell us what they're digesting about all these news headlines we're bombarded with? Just watch the price performance of the market. And the simple thing we look at is, where is the market relative to its 50-day moving average? And when that stock market falls below that 50-day moving average, what that means is something has caused the market to decline to a level that's lower than it's been on average for the last 50 days. Good news doesn't do that, folks. Bad news does that. So we know something's going bad. So this is our first cue to maybe get a little bit defensive. And on our first graph here, you can see that the stock market first fell in 2020 here below that on about February 4th. And from February 4th until about March 5th, you had almost a month that signal was delivered to you, and you could have taken some defensive measures in your portfolio. So what are we doing in those cases? We're raising a little bit of cash. We're moving from lower quality investments to higher quality investments. We're taking some of our speculative investments off the table. What we're not doing is we're not getting out of the market. We're not smart enough to do that. We're never smart enough to do that. You always want to keep some, what I call, keep some oars in the water. And those should be your high quality investments. It might be the broad market index holdings, the QQQ or the S&P 500, or your high quality stocks, your Apples, your Microsofts, your Amazons, things like that. So you don't want to take all your oars out of the water. And if you look at that chart, you can see that you had about a month to do that. Before we fell another 35%. The NASDAQ dropped another 35% after March 5th. And so if we'd have done that, we wouldn't have absorbed all of that downfall. And then you can see it also fell below the 200-day moving average, which is the black line on the graph you're going to see here. So now we've isolated, we moved some money to the side, we've changed our portfolios a little bit. We're down a little bit. We're always going to be down with these kind of turns. We're not going to be up in this kind of a market. But our goal here is to take the edge off. We're not going to be down as much. Now we're looking for signals as to how do we know to get back in? Well, we want to do that the same way. We want to look at a moving average. But in this case, we're going to look at a little shorter term moving average. We're going to look at the 21-day moving average. And we'll see here that on about April 4th, the stock market moved back above that 21-day moving average. And it moved up there from April 4th to about April 13th. It traded right in line with that. Gave you some time to put a few more players on the field. Get a little bit more offensive. Now, we don't want you to just go all out here and put everything back on, but that's a time that certainly we've spent a little bit of time. The market's higher than it's been the last 21 days on average. That's a sign that things might be turning, and we want to participate in that turn. Keep in mind in this most recent market sell-off that the market hit its bottom on March 23rd. And from March 23rd to April 4th, we didn't do anything because we didn't know it was coming back up at that point. But what happened at March 23rd? things probably felt terrible, as I remember they did, but we didn't take all of our oars out of the water. We still had money in the market. That money bouncing up from that March 23rd low to April 4th is participating in that. So the fact that you're not taking all of your money out of the market guarantees that you're going to have money bouncing back from that low, and you're going to participate in that move from that low, which is really critical, because the move from the low on up, that first little bit of a move, can be a sharp move oftentimes. So, and then we're going to watch stocks, and as stocks move above the 50-day moving average, the next moving average, now we're going to get pretty much more offensive. We're going to get almost all of our players back on the field. This is a way to take everything that's out there that the market is throwing at you, and you don't have to feel like you need to react to all these emotional headlines. You know, a lot of times you'll see guys that have newsletters out there that claim to know, how to navigate this market or how to do that. This is a simple, non-emotional process. All those newsletters are going to do is to cause you to pay a subscription fee to some person who thinks they know how to predict how the economy or the political environment is going to affect stocks. No one knows how to predict that. I've been doing this 31 years and no one knows. This is a good, disciplined, non-emotional system. So a couple things to be aware of in this simple process. There's a couple caveats. Number one, it's not a perfect system. You're going to have times when the stock market falls below these moving averages and then quickly comes back up. You might have just taken a few chips off the table and now it's reversed back up, or vice versa. It could rise above a key moving average. You start putting some money back to work and it falls back down. That's okay. Just stick with the system. You're going to be right more often than you're wrong. And that's what this is all about. Now, I like to use a lot of sports analogies. So this is kind of like baseball. The best hitters hit 300, 330. They don't hit 1,000. They don't get a hit every time at bat. And that's what we're trying to do. We're never going to predict the exact bottom. We're never going to predict the exact top. We're trying to just take a little bit of edge off those real lows and to move some money around. And to have a system in place that takes all this news we're hearing, the economic news, the political news, the virus news of this year, 2020, and to have a system in place to deal with that and to manage your very serious money. So that's Mike Poland with 5 minutes to improve your financial life. Thanks for listening.